Windsor-Essex home prices just dropped 7%. And look, if that's all you saw, a headline scrolling by on Facebook at 11 at night, you'd probably think this market is falling apart. But it's not. Stick with me for the next few minutes because the real story is honestly a lot more interesting than that one scary number. And there's a piece of it, something happening literally right now over the river that I don't think enough people are connecting to what's going on with housing here. All right, let's start with sales. 522 homes sold across Windsor-Essex in July. That's down almost 8% from last July. And new listings were down too, about 6.5%. So it's not like a wave of sellers flooded the market and buyers just vanished into thin air. Both sides, they kind of slowed down together. So it's like they agreed on it without actually talking to each other. All right, just a quick intro. I'm Linda Hakr. I'm a realtor with Jump Realty. I'm based right in Wheatley. I'm just going to go through these numbers. I do it every single month, so you don't have to. And trust me, nobody's curling up with the stats PDF just for fun. That's my job, not yours. All right, so why would both buyers and sellers pull back at the same time? Honestly, it's probably a mix of things. Interest rates are still sitting high enough that a lot of people are just choosing to wait it out. Sellers who don't need to move, they aren't rushing to list into a slow market. And buyers who could stretch and buy are deciding a bit of patience might save them money down the road. And I hear it constantly in conversations with clients. We're just watching the rates. We're just going to watch the announcements for now. We're just going to sit back and we're just waiting. Nobody's panicking. Everybody's just watching. And when everybody's watching at the same time, that's when a market goes quiet without actually going bad. It's also worth remembering that a lot of people bought or refinanced at a very low rate a few years back. And they're simply not in a hurry to give that up unless life forces the move. A job change, a growing family, they want to downsize after the kids are gone. That nobody has to move energy is a big part of why listings, they're down, not just prices or fear. Here's a number I actually think matters most. Months of inventory. So in July, that number was 4.4 months. A year ago, it was 3.9. Doesn't sound huge, I know, but it means buyers have more to choose from and more time to think than they did a year ago. Nobody's forcing you to decide over your lunch break anymore. And the sale to list ratio backs that up too. Homes sold for right around 100% of the asking price in July. 100.1 to be exact. A year ago, it was 102.6. So those bidding wars where people are paying 10, 20 or more over asking, yeah, they're a lot rarer now. Your negotiating instincts can finally come out of hibernation. Okay, so before I actually keep going, I just want to hear from you on this one. What did you pay for your place? And does it feel like 100% of asking, or did you get caught up in one of those bidding wars a couple of years back and feel like you overpaid? Just drop it in the comments. I read every single one and it's always interesting to me and it helps kind of decide what I'm going to cover next. And I'd like to say this as well because I think it gets lots in the rates are high narrative. It's not just about the rate itself, it's about what the rate does to the math on monthly payment. So even if you have a small move in a rate change, what somebody qualifies for, sometimes by tens of thousands of dollars, like it can affect that, right? So a buyer who felt comfortable at a certain price point 18 months ago might genuinely need to adjust their expectations now. Not because the homes got less affordable overnight, but just because the borrowing side of the equation shifted under them. That's a conversation I have constantly, and it's a lot less scary once you actually run the numbers instead of guessing at them. All right, let's get back to it. Okay, here's the part that I really want you to hear, the part almost everyone skips past. Yes, It's the average sale price. It's down 7%, sitting at 541,000. But the MLS Home Price Index, which is a smarter number, honestly, because it actually adjusts for what's sold instead of just averaging whatever closed that month. That number is basically flat. So it's up less than 1% over the year. So when you hear prices down 7%, a lot of that time with that actually, what's happening is the mix of homes that's sold, they just changed. Maybe you had fewer big expensive homes close or sale that month. So it's kind of a bit of juggling a whole class by one kid's test score, right? It doesn't mean your house lost 7% of its value overnight. And that distinction, it really matters a lot. Whether you're a seller trying to figure out what to list or just a homeowner lying awake wondering what your home equity actually really looks like right now. Does that change how you're thinking about your place? What do you think? Let me know in the comments. All right, so let's zoom out a bit for a second, because there's something else that's shaping this market and has nothing to do with interest rates. It has everything to do with geography. Anybody know what that is? The Gordie Howe International Bridge. It officially opened at the end of July, connecting Windsor and Detroit with a brand new 6-lane crossing. And I know a bridge doesn't sound like a real estate story, but stay with me. This is now the fastest, most modern connection at the busiest land border crossing in North America, and it's expected to save hundreds of thousands of hours a year in crossing time for commuters, for truckers, and everyday travelers. So for a region like ours, where so much of the local economy runs on manufacturing, logistics, and cross-border trade, that's not a small thing. Faster, more reliable border crossings tend to attract more investments, more jobs in transportation and warehousing, and more day-to-day movement between the two cities for work, for shopping, for weekend trips. None of that shows up in monthly sales reports right away, but over the next few years, I think it's going to be one of the quieter forces shaping demand in Windsor-Essex, especially in the areas closest to the crossing. This is definitely worth keeping on your radar, even if it's not moving the needle on July's numbers just yet. And I'd also say this is exactly the kind of thing that tends to show up first in the areas closest to the crossing, and then the ripple outward over a few years as commute times shrink and businesses figure out where they want to be. So, if you're the type who likes to be early to a trend instead of reading about it after it's already priced in, this bridge is worth watching a lot more closely than most people are giving it credit for right now. Curious if you've noticed any of that shift already, especially if you're near the crossing. Drop a comment below and let me know. Okay, quick style note, because this one always surprises people. Bungalows are still, after how many months, still by far the most popular thing selling across the county. Again, over 120 sold in July alone, averaging around $480,000. The 2 stories and the ranches are moving too, just at a higher price point, closer to $690,000. So again, same trend as the last several months. Windsor-Essex apparently is a 1-story kind of crowd. Yes, it is. And honestly, it makes sense when you think about actually who's buying here. A good chunk of the clients who are they're downsizers, they're retirees, and they specifically want to avoid the stairs. And a lot of relocators moving from bigger cities are chasing exactly that single level, low maintenance lifestyle they can't easily get where they're coming from. So, it's not just a quirky local preference, it's a reflection of who this market is actually serving right now. So, what does this actually mean for you? If your selling price is right from day one, I feel like I say this in every video, I am on repeat, price it from day one. Inventory is climbing, so an overpriced home just sits there racking up days on market, and buyers notice that. Same as you'd notice a menu item nobody's ordering. $20.5 days was the median this month, up from 18.5 last year. Not a dramatic jump, but it's a signal, right? The market's a little more patient than it used to be, and buyers are knowing it. Pricing it right the first time instead of chasing the market down after 3 price drops is still the single biggest lever you control. It's like trying to catch a dropping knife, right? And the presentation still matters. And the more people expect in a slower market. When buyers have options, the homes that show well and photograph well are the ones getting the showings, and the ones sitting there looking tired are the ones racking up those extra days on market I just mentioned. So if you're buying, you've got room. More listings, less competition at most price points. Sellers who are genuinely more open to an actual conversation than they were a couple of years back doesn't mean everything's negotiable. The good ones, in good shape, still move fast, but you're not fighting the same frenzy you had hit back in 2021 or 2022 when apparently everyone in Ontario decided to buy at the exact same time. Use that room. Ask for the closing date you actually want. Ask for the inspection period you actually need. And don't feel like you have to waive every condition just because that used to be the norm around here. Because right now, it isn't. Which camp are you in? Buying or selling? Drop it in the comments below. I'm genuinely curious how much of you are actually buyers and how many of you are sellers. I get asked about Wheatley a lot since that's where I actually live. Honestly, it's such a small market that pulling a reliable monthly average out of this kind of market, it's misleading. We're talking a handful of sales some months, small enough that I could just tell you who bought what. But if you want to know what's happening on a specific Wheatley street, just ask me. I probably already know, and I'm not even being dramatic about that. Leamington and Kingsville are both moving in pretty different directions from the rest of the county average right now. And by the way, Kingsville numbers in particular, this one is the wildest I've seen all year. So before you go, tell me your neighborhood and I'll tell you exactly what I'm seeing on your street. And let me know if you're buying or selling or just here to nose around and like some of us and see what's actually happening in the market. Let me know what you think. And if this was helpful, make sure you hit the subscribe so you don't miss next month's numbers. And if you want the town level breakdown, go watch Kingsville next. Sales there jumped to 57% in July. And the reason why is honestly one of the wildest numbers I've seen all year.